Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. We help folks who owe the IRS or their state over $10,000. We also help folks who have years of unfiled tax returns discreetly get back into compliance. And today I'm talking about one of the most common notices that the IRS sends out this time of year. I'm talking about the CP71C. I'm going to talk about what this notice is, why the IRS sends this notice out this time of year, late November and into December, and what you should do if you got one of these notices. I got a sample one here that one of our clients received. It was addressed to one of my staff, Leah. Some of you may have worked with Leah. So I'm just going to go through the notice, basically part by part, explain each part, what it means, and then tell you what you should do if you received one of these notices. So first of all, what is the notice CP71C? It is, and as it says right here, an annual reminder of balance due taxes for year 2017. It is an annual reminder. Why does the IRS send these out? Well, one reason is because it helps with, collections to tell folks what they owe. Another reason is because it's required to. Under Section 7524 of the Internal Revenue Code, it says not less often than annually, so that means at least annually, the Secretary shall send a written notice, and by Secretary, they mean the Secretary of the Treasury, and by extension, the IRS. So basically, the IRS shall send a written notice to each taxpayer who has a tax delinquent account of the amount of the tax delinquency as of the date of the notice, right? So they're basically saying the IRS needs to send a notice at least annually to every taxpayer who has a tax delinquent account. That means they owe back taxes, telling them what the amount they owe is as of the date of the notice, right? So that's what this notice is doing. It's saying that as of this date, November 20th, 2023 in this case, you, taxpayer, I obviously redacted the taxpayer's name there, you owe us $1,534.56. Now, the CP71C is tax year specific, so if you owe the IRS for multiple tax years, then you may receive multiple CP71Cs towards the end of the year. Generally, you need a balance of at least $25 for a given tax year in order for the IRS to send you a CP71C. And you also have to be in what's called status 24 at the IRS, which is kind of a general status for taxpayers with balances who are not in a resolution, but have not yet been moved into active collections. So let's get back to the notice here and just go over it part by part. Again, the IRS is required to send you this annual reminder explaining the amount that you owe. And basically in the billing summary here, it basically just says the amount that you owe. Nothing too complicated about that. At the bottom is the payment coupon that they'd like you to pay. You want to pay off the amount you owe in full by the date provided in the notice, which is generally 21 days from the notice date. Now, obviously, the IRS just wants you to pay off the balance in full, right? That said, for some folks, that is the best way to go. Just pay off what you owe. But if you have the money to pay off some tax years but not others, it may be in your best interest to pay off certain tax years before others. I'm saying it may matter in some cases. For example, if you have an older tax debt that's going to drop off due to the statute of limitations very soon, don't pay that one, right? I mean, unless you're in active collections, but if you got this notice, you're probably not in active collections. And just pay off a newer tax year that has a longer collection statute. Or maybe you qualify for some kind of tax relief. In that case, don't, pay off the IRS here for the full amount. Pursue your tax relief options. Sometimes people see the payment coupon here and they think, oh man, I got to pay this by December 11th. I'm telling you, do not worry. If you got the CP71C, you very likely are not in active collections. You have time to figure out what your game plan is with this tax debt. I don't know how much time. The IRS could kick you to active collections next month, or it might be another 6 months or a year or more, right? But I'm saying you have time. This isn't a freak out notice, okay? I've made other videos on some freak out notices. CP71C is not a freak out notice. So moving along here, This is section is what you need to do immediately. This is what the IRS wants you to do. Obviously, they want you to pay, right, the full amount. They also tell you here, if we notify you that we suspended enforced collection on your account because it would create a financial hardship, and your financial situation has not changed, you don't need to do anything. That's basically saying if you are in currently not collectible or CNC status, you don't need to do anything. That said, the typical notice the IRS sends to folks who are in CNC status is the CP71A rather than the CP71C. But in any case, that's what this paragraph means. If you disagree with the amount due, like if you disagree with the liability, you can call the IRS, or obviously you can work with somebody. Maybe the answer is an amended return, audit reconsideration, AUR reconsideration, or something like this. In the next section here, the IRS talks about denial or revocation of your passport, and this is pretty scary. But this only applies if you have seriously delinquent tax debt. Okay. As it's defined in Section 7345 of the Internal Revenue Code. So let's pull that up. Here we are. Section 7345, revocation or denial of passport in case of certain tax delinquencies. Okay, so here's where it defines seriously delinquent tax debt. This is the kind of tax debt that if you have tax debt that meets these criteria here, the IRS may certify your tax debt to the United States Department of State as seriously delinquent, and the State Department may prevent you from getting a passport or renewing a passport. That's typically what they do. In certain cases, they could actually revoke the passport as well, but they don't do that as frequently as simply preventing you from renewing or getting a passport in the first place. So here's the requirements. So in order for a tax debt to be seriously delinquent, it has to have been assessed, right? Assessed means officially recorded on the government's books. It has to be greater than $50,000, and this amount is adjusted annually, by the way. It's currently $59,000 for 2023. Okay, so this amount goes up annually. With respect to which either a notice of federal tax lien has been filed with all administrative remedies exhausted, or for which a levy has been made. And a levy. So the difference between a lien and a levy. A lien is when the IRS files a document in state and or county records saying that you owe them money, and they have dibs on whatever money you get. Okay, that's a lien. That's just a notice in state or county records. It's the recording of a document, a notice of federal tax lien. The levy, and people get these confused, but a levy is when the IRS actually starts taking your stuff. Okay, wage garnishments, bank levies. They go into your bank account and take money. Social Security levy. Okay, so right. So a tax debt will not be seriously delinquent unless a notice of federal tax lien has been filed and administrative rights have been exhausted, or a levy has been made pertaining to that tax debt. Also, if you're in a resolution on your tax debt, it is not considered seriously delinquent, right? So if you're in an installment agreement to pay off even if it meets these other requirements, if you get into an installment agreement, right, whether full pay or partial pay, you get in currently non-collectible status, or obviously if the if the amount has been discharged in offer and compromise, then you don't have to worry about this, right? So even if you have this big tax debt, if you get into a resolution with the government, then the tax debt is not considered seriously delinquent. And if the IRS has already certified your tax debt to the State Department, they will decertify it, okay, after you get into that resolution. All right, going back to the notice CP71C here. Okay, I explained the passport stuff. There's more passport stuff here. Here's 59,000 I talked about. I think I explained all this in what I just told you, so I'm not going to go over it again. Next section is payment options. IRS basically telling you how to pay them. That's pretty self-explanatory. Not going to spend time on that. What the IRS says they'll do if they don't hear from you. If you don't pay them the money by future date, they say they're going to charge more penalties and interest. They'll continue to send you these annual reminder notices, and they can file a notice of federal tax lien against you. And they also may levy means take your stuff, and that is very bad when that happens. They say here, if you file a notice of federal tax lien, it may be difficult to sell or borrow against your property. That's true. The notice of federal tax lien may also appear on your credit report. They say may there, and I think they know this, but Notice of federal tax lien no longer appears on your credit report. Back in 2018, the 3 credit bureaus, Equifax, Experian, and TransUnion, voluntarily decided to no longer indicate notices of federal tax liens on credit reports. I think I have a video about that up here. But it's still public record, though, so someone could still go, to state or county records and see that the notice of federal tax lien hasn't filed against you. It just doesn't appear on your credit report anymore. Additional information, this is all just stuff they put on every notice. You can, here's the official IRS webpage on this notice, and here's where you get tax forms, and here's how you can contact us and keep this notice for your records. So what should you do if you get a CP71C? Well, first thing, like I said, don't panic. This is not a freak out notice, okay? It's merely an annual reminder from the IRS that it's required to send you. And if you are getting, and if this is the only thing you're getting from the IRS right now is the annual reminder, you aren't in active collections yet, okay? Okay? The IRS could kick you into collections next month, right? Start sending you those collections notices. But I would say at this point, you have some time to figure out your game plan on how you're going to deal with this tax debt. Okay. And really that's the best thing you can do when you receive this notice. All right. I've talked about the options quite frequently here on this channel, but obviously you can pay the debt off in full. You can enter into an installment agreement, either a full pay installment agreement or a partial payment installment agreement where you pay less than you owe over the course of the installment agreement. There's currently non-collectible status, CNC status. There's obviously the offer in compromise, which is an agreement with the government to sell your tax debt for less than you owe. If you want more information about these tax relief options, I have a video right here at the top left of the screen. I also have my whole tax relief playlist down here at the bottom left-hand side of the screen. If you want to reach out to us at Choice Tax Relief, give us a call, 866-8000-TAX. That's 866-8000-829. Or visit us at choicetaxrelief.com. You can also book a free consultation by clicking up on the menu up there. It says free consultation. And we will reach out to you and speak with you. So thank you so much for watching, everybody. See you in the next video. Bye-bye.